What does the recent series of defaults mean for the credit markets? Hi, I'm Colleen Cunniffe. In this video, I'll dig into some of the considerations behind the latest defaults and what they could mean for you and your clients. Plus, I'll unpack how Vanguard is navigating credit selection in this volatile market, where we see the biggest opportunities and risks, and how we're approaching systematic credit investing. I think the most important point I can make here is that our selection process in active fixed income at Vanguard remains the same, regardless of market conditions. It's grounded in deep fundamental analysis, vetted through rigorous debate, and implemented by senior investment professionals. With that point made, it is correct to suggest that in tight trading markets, it can be more difficult to find attractive opportunities. Keep in mind that we are long-term investors, and that frames the way we think about opportunities in the market. So in this market environment, it's important to maintain discipline around our core credit tenets, strong balance sheets, clarity around business trajectory, and management teams with access to levers to respond to unknowns. This framework positions us to be comfortable investing in issuers and sectors we like and focus on long-term performance, even in tight trading markets. When we reflect on broader sector allocation within credit, we consider several factors to help inform our outlook. Our team views on market technicals, issuer fundamentals, and valuation all anchor our debate. Given these considerations, we remain constructive around structured products and European investment grade. Structured products can provide high-quality short-term carry and generally lags performance in IG, which provides opportunities. And while European investment grade has demonstrated good performance, given its shorter duration, we think it could continue to show performance relative to US IG. As for risks, while we are very careful not to dismiss an entire sector and prefer to leverage our strong team to drive selection, we are cautious on EM high yield given valuation and technicals, and remain diligent on US high yield for similar reasons. There has been a lot of chatter in the market about a few headline defaults. The most notable aspect of these defaults is that they have occurred in a short span of time, raising some eyebrows and questions about what they might imply about the state of the credit markets. The current read is that each of these situations have idiosyncratic drivers as opposed to broader economic weakness that drove issuers to default. Now, admittedly, fraud can be very hard to detect. That said, what this smattering of topical situations does is remind advisors how important it is to know how your investments are being managed and to remind asset managers that thorough due diligence in the credit markets needs to be a non-negotiable anchor to any investment process. So this would be a great time to reach out to clients, review portfolios, and have a conversation about their investment goals. When we are talking about systematic credit strategies, we are not talking about a quantitative or factor approach, but rather the opportunity to execute larger portfolio trades. These trading opportunities help to provide liquidity in the market and can be a good opportunity for portfolio management to optimize portfolio strategy for the benefit of our clients. However, it's important to understand that while the execution may be on a basket of securities, the Vanguard Active Fixed Income team has a view on each of the issuers in a given basket, maintaining our discipline and not compromising on our fundamental approach to investing. Be sure to like this video and subscribe to this channel for more insights from Vanguard's thought leaders.